How are you, man?
I'm doing great. How are you doing this morning?
I am good. We got Mother's Day weekend coming up. I think we should start by saying Happy Mother's Day coming up next Sunday to all the mothers out there. It's certainly an opportunity to just throw some respect to an amazing role. You know, we talk about roles in business, but the role of the mother in the family is just second to none. So happy Mother's Day a week early to everybody out there, but we're not going to see it until after Mother's Day. So we had to throw it out there. All right. What you know, Jim?
It's turning into a really interesting market in a really good way.
Okay. Tell me your points before I put up any numbers here.
Yeah, just looking at the pulse of if I'm looking at what our group is doing, uh, we have a large amount of inventory coming in, or a large amount of new listings coming in, whether it's coming soon or whether it's coming live right now. And they're staying on the market, some of them just a little bit extra, and we're able to get an open house or two out of them.
Which
And
is
that's
good,
been a lot
right?
of fun. Yeah, because now we're walking away with buyers.
Yeah.
Love it.
Well, we had talked, I think, a few weeks back about having a really good listing launch strategy, right?
Yeah.
So this speaks to that. Well, let's pop the numbers up. So here's Rockwall County. I mean, I'm loving the blue line. You know, you got to take it in context. So I look up here and we've got 169 active listings this morning in Rockwall County, and active under contract, there's 44, which is a considerable amount more than we've had in the previous weeks, right?
Mhm.
And pendings is 56, which looks pretty constant, but closings with 56, mind you, end of the month, we, for whatever reason, agents been conditioned to close at the end of the month. So it's not like we're selling less.
Yeah.
Like that could be one reason inventory goes up, right? Like if we stop selling real estate, houses will sit longer on the market or more inventory. I'm not sure that's necessarily the case. I actually think there are more listings that are actually out there now.
Yeah.
And you're seeing it here because these lines are pretty constant down here. If I click through Kaufman County, same kind of story. They're back up. They had a spike a month ago. But remember, it's going to move more volatilely in a market that doesn't have as much volume, right? Where you look in Dallas County, it's still high. It went backwards just slightly. I think we went from 839 to 814. But look at the previous weeks here. 814 is an enormous amount of active listings on the market. Same conversation. Active under contract, pretty constant. Pending, pretty constant. Sold a little more here, but end of the month. And it's not telling a story that we're selling less houses. It's just saying there's more inventory on the market, right?
Yep.
Collin County, same thing, kind of plateaued here, but look how high this number is compared to previous weeks. There's 539 active properties. You look at the active contracts, 174 is actually up. So we're selling them there and the inventory's up. Pending is up at 373. So they're selling more and the inventory is up. And closing at 364, you look into the month, there's always a spike in closings, right? If I just kind of clicking through this here, Denton County is up, Hunt County is it's kind of over 60. We get out to the lake, inventory is quite up at the lake. Yet, although we did see the sales kind of taper down a little bit. So actually, that's, hang on 2 seconds. Sometimes the chart doesn't make it. There you go. Don't act like I know what I'm doing because I don't. But you know, the numbers came down, but the closings and the pendings went up. So what do you make of that? 61 active properties is still a good number.
Mhm.
23 active option contracts, pendings 28, closings 19. That was a little low for Henderson County, right? Um, however, I mean, everything's looking good and on the up and up, and we're moving in a good direction. Finally is the word I would throw at that. It felt like it was a slow go this year.
Yeah, it felt like it was a slow go, but you look at the overall numbers and even I feel like it felt like a slow go because we're looking at it from the lens of last year. And last year was just such an abnormal year. So if we take a look at, all right, how are we doing to pre-COVID? The numbers look great to pre-COVID.
Yeah.
And especially our new listings. Our new listings are just, I haven't looked at them for April yet, but I know approaching into March, new listings were just about as even as they could be with pre-COVID numbers. So I think we're going to start seeing some of what we're seeing right here, where we start seeing this exponential growth.
Yeah. And I think we talked last week, it could be people rushing, getting nervous.
Yeah.
Maybe, we'll see. All right. So we've been talking about this for a while now, is the fact that the iBuyer gobbling up a considerable amount of real estate that may never come back out to the open MLS again, meaning just institutional investors are buying and holding, which is the whole buy and hold. And you can't fault them. I've bought and hold real estate. I own rental properties, right? Like it's a strategy. Yet the two ways to slow it down. One is HOA restrictions, and the other is laws. And saying, it's just like back in the day, condo complexes would say you couldn't have more than 10% owned by an investor, or the new construction will say we won't sell more than 10% of our inventory to investors. Like 90% got to be owner occupied. Well, Dallas is now considering restricting home sales for real estate investors. What do you make of that?
Yeah, I've been here lately a big proponent of this. Every time we go into some sort of housing extreme, we have some sort of regulation that comes out of it. And I thought it was really interesting that they started making the correlation in Canada and how their real estate market is and kind of some of the restrictions they have with foreign investors. So different, but similar concept. And one of the things that it really made me think of is every year we go to reunion, and Gary Keller, no matter what we're doing here in the States or elsewhere, Canada is always constant. And so I started looking at this. Maybe this is one of the ways they help kind of curb everything, is taking away some of the extremes.
Yeah, I thought it was interesting. It's the first article I've seen where a government agency is stepping in and constricting around investors purchasing real estate in the near future. And we talked about this, like there was a real fear that iBuyers are buying up everything. I mean, if you list a house in any decent, affordable price point, how many offers show up day one from an investor in sloppy terms?
Yeah, no, absolutely.
Yeah.
I think, there's a lot of opportunity here for reintroducing your first-time home buyer too, just because of that.
Yeah. All right. So mortgage is becoming an interesting battleground, as they're calling it. And this was on Inman, and it was into last week. And it's an opinion piece. I always like to point that out. I guess everything's an opinion piece, but here's what I know. Mortgage companies as a whole made an enormous amount of money on refinances. And that's pretty much gone at this point. Like, unless you were living under a rock, you refinanced your house and got a rate in the 3s or 4s, right? And so there's all these people employed by this industry that is certainly being laid. There's a lot of layoffs and things like that going on. But they're reinvigorating their energy to purchases. And by doing that, I think it's creating some aggressive, innovative tactics towards the mortgage space in our world. They use the term iBuyer and Power Buyer. We've talked about those on here before. Power Buyer being buy the same as cash. And basically they're reshuffling the largest businesses aiming to disrupt the industry. We've seen that. I mean, I didn't plan this, but Rocket's got an ad up here, right? Like the whole lending tree, Rocket Mortgage, Zillow wants to play a play into mortgage. It's certainly going to come at us in 1,000 directions. And I guess the bigger question is, okay, so now we know this, but why should we care as real estate professionals? What do you think?
I look at it in a couple different lights. I'll be interested what you have to say on it too. Is one, if you look at what we just talked about, having the restrictions on some of these iBuyers, this makes a lot of sense on, all right, how do we keep ourselves relevant inside this space, right? Two, I look at Zillow, and if Zillow is so interesting in what they try to do, but over the last year or two, I just feel like they're a ball just being bounced against the wall, and it's, all right, let's try this, let's try this. And if you're a real estate professional, I would be really worried about what is Zillow really doing. And if you look at some of the numbers of how they've gone, and it's kind of followed along with some of our refinances, right? But they had a big surge through last year, and then to start this year, they've started taking a dip. It'll be interesting to see who stays in, who gets out, because there will be winners and losers here. And if Zillow gets out, what type of credibility do they have, and what is their model? What are they doing anymore?
Yeah. And I think from the realtor position, we got to stay educated around these things, because these are the people marketing our consumers, right? And these are the people that are certainly going after the mind share of the people we do business with, right?
Absolutely.
So,
yeah, if you Gary made a big statement about, do business with who you want to do, but don't come complaining when you've got Rocket Mortgage Real Estate or whatever, Rocket Real Estate in your backyard.
Yeah. So I find this interesting. I don't know if I've shared this before, but I'm going to show you a personal email. So this is Caliber Home Loans. Caliber Home Loans is based out of Capel, right? And they are the lender on one of my rental houses there in Dallas, Fort Worth. And this is on my personal residence in Georgia. And they're saying your home value, this is the lender on my rent house in Texas, sending me an email about my value of my home in Georgia. Increase this, your estimated home value. Here's how many homes were sold. And then I started looking and I said, okay, powered by Come Home, learn more about House Canary Incorporated brokerage. So you go down here to the fine print, they're sending me comps. And then you read down here, House Canary holds a real estate brokerage license in blankety, 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 blank, Texas. And then sometimes it's called Come Home and sometimes it's called House Canary. So now the lender on a rental property is figuring out how to try to use technology to gain business back into the real estate space. That's crazy. And but here's the bigger question, Jim, is they're not doing anything we shouldn't be doing.
No. Yeah.
They're sending, here's the value of your home, your price has gone up, your da 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 da, and they're doing it and we're not doing it. That's shame on us, right?
Yep.
Like that's that whole market snapshot evolved into neighborhood nurture, the whole thing.
Yes. Yeah, I was going to say just that, Brett, there's probably some realtors out there going, well, how do we do that? Dive in Command, the monthly neighborhood nurture, get your people on it. Is it perfect? No. But I would venture to say outside of a realtor actually doing a CMA, nothing is going to be really perfect, but it is something that gets you opening it, reading it, and contacting the person. Are these really accurate numbers? And then it starts up a whole conversation.
There you go. All right, let's jump back into this. One of the things that I love about this article, this on the Dallas Business Journal, is it's quoting home showing soaring in Dallas Fort Worth despite higher prices, mortgage rates. And then it comes down here and it quotes showing time, which that's a whole nother conversation, but showings is the leading indicator to what's coming. And if showings are up, it tells us contracts should come up in the future. Demand is still high, blah, blah, blah. And so this article is saying, hey, quickly rising mortgage rates, home prices, inventory shortages are not enough to sideline Dallas Fort Worth house shoppers. That's big, right?
Oh, yeah. Yeah,
This is using data from March, so it's 30 days past, but I still think it's great. The other thing is the ratio of showings to listings was 16. What do you make of that?
Yeah, this was a big stat I've been tracking really ever since Gary started making mention of this at Reunion. If you haven't caught on, I had a lot of takeaways from Reunion this year. Everybody needs to go. But starting out the year, we had a great amount of showings, and we had a really good December. And then we started seeing this drop, and then around spring break, we started having the conversation. We were starting to see a little spike in the home showings, and it wasn't until about 2 weeks ago where we were actually at the same where the showings were back in January. So, some of that is what we were looking at earlier with the amount of new listings that are on the market. But I think you also have to couple that along with, you have this surge of buyers that are coming out onto the market and really being active, really being aggressive, and trying to find something before another interest rate hike.
Yeah. And we should pay attention, right?
Yeah, watch the number of showings and watch the days on the market.
All right, so this was interesting to me. Foreclosure filings are up 132%. So I just baffled my head until somebody explained this to me, and somebody smarter than me, Jim. I've been saying, hey, the amount of equity built in these homes over the last few years, it's almost impossible somebody would foreclose and the word short sale was like a term of the past and all this stuff. But here's what somebody explained to me that I hadn't thought of. If I bought a house in the last year or few years, and I did minimum down, 100% VA, 3% FHA, 5% conventional, and I maxed out my debt to income ratio to get into that house. Okay. So I was on the top end of what I could afford, but I got into a house. Well, the amount of price appreciation that's happened over the last 2 to 3 years, all of a sudden just got caught up with on the tax bill. So all my monthly mortgage payments are about to adjust because my taxes went through the roof, and it's going to move me beyond the threshold of affordability to my debt to income ratio. And it's going to really put a hurt on me when that payment adjusts. 1, 2, inflation putting a hurt on me behind the scenes. It's actually that it's a little scary in a sense that, that responsible borrower that bought the house, but just kind of bought on the future, might get priced out of their own property from an affordability standpoint. And I hadn't thought of it like that. And I think that's real. I think foreclosures are going to come.
Yeah, I think you're absolutely right. We had this conversation in a group meeting a couple of weeks ago, and I brought up that exact point. You know, it's the disease of kind of your American consumer. We look at what we can afford right now and we max it out, right? And so I think you have a lot of that. And I told everybody in our group, go out there and make calls. Like now is the best time to be making calls. You think you can't fight a tax bill? But believe it or not, I had somebody contact me about it and he fought it and he won, got it lowered by 100,000 or his assessed value. But it also starts up this conversation of I think you're going to have a lot of people that have buyer's remorse. They moved out of the city, not thinking they go back into the office, and now they're going back into the office and they're looking at it going, it used to take me 15 minutes to commute. Now it's taking me an hour and 15. So I think you have some of that, but exactly what you just said, you have that tax bill going up. And now since you kind of max yourself out on that, you're trying to figure out where's this extra money going to come from. You either do this, try to do a sale. If you're short on, you do the short sale. But also, I made a mention of her earlier, anytime you see a headline that says from a year prior, you got to do some digging on that. And even in the article, it states just overall, the filings and foreclosures are just down. You look at them pre-COVID and they're healthy.
Yeah, I don't think, I think it's clickbait. We talked about that a lot. I don't think there's a flux of foreclosures right now.
Yeah.
I think there could be a flux of foreclosures in the future, and all the more reason to be in relationship with our database, right? Because they probably have enough equity to get out of that house.
Yeah.
But their embarrassment or their can-do, I gotta figure life out attitude might put them in a bind, and maybe you're that counselor, that voice of reason that says, hey, now maybe we need to get you out of this house before it gets too crazy.
Yeah, I had a conversation with somebody yesterday and we were talking about fear and just talking about, sometimes fear just makes you freeze.
Yeah.
So you enter into this zone and it just makes you do nothing and you want to hide and hope it gets better. So you're absolutely right.
Yeah. So this is interesting on NAR's website. Oh man, what just happened to research? Where'd it go?
I love it. I love.
Oh, here we go. Get off there. It's an ad. All right. When I go to Dallas Fort Worth, it says 7.1% of the homeowners in the area bought their home within the last year. What does that tell you?
I look at just your overall neighborhood. This was a stat I kind of kept up with over the last, 5 or 6 years in determining how we do different farms. And so I could tell you most areas have about an average of about 4.5% turnover.
Yeah.
So if we're looking in that saying that's your average, that tells me that we're having a pretty big amount of turnover in the area.
Yeah, for sure. So I don't think you can just do the math of 100 divided by 7, which turns out to be 14. That doesn't say that every 14 years people are turning their house over. Not at all. It says that there's a velocity of 14 times that that's happening. It's really what it says. But the point is, we used to say people would turn their house over every 5 years.
Mm-hmm.
And we think that creeped up to 7 to 10 during some slower times. I think it's moving back into the faster pace is what I would make from that. What are you making from that?
Yeah, I think from what I was just talking about, you have people with buyer's remorse. Man, I'm trying to make sense of really that first time home buyer and how this plugs into that. But But in where we lie right now, I think you do have the buyer's remorse. I think you have a lot of people that are looking at the interest rates. I think you have people that are uh, in that fear zone. Uh, there's just a lot of movement and a lot of reasons to move right now. So I think we will see that average come back down. But also just kind of think it's area wide. If you look in Hunt County, you get into more of the rural property, and I think you're going to have people that tend to stay on more of those types of properties where they make it more like an estate than you do if you have a lot of smaller or large subdivisions, these mega subdivisions, and you tend to have more of a turnover in those areas. Because if you look at Wood Creek or the shores here in the area, you're looking at where I was said about 4.5% turnover. You really get closer to like 10% turnover in those larger areas.
Yep, for sure. All right. Let's get smart for a minute. So this is a hot economic topic right now, and I'm going to give you a simple explanation to what this means. So they keep talking about this yield curve inversion and what that means. And I'm going to explain it to you as simple as I can get it. You got the cost of borrowing or lending long-term money. 10 years is considered long-term. A mortgage is considered long-term. Longer than a 10-year period. What does it cost to borrow money or lend money from a rate perspective? And then inside the US, they have shorter term treasury notes, which are this 2-year treasury note. So when they call it inversion, this is basically what it says. The recent trend by the market to frame new developments in a negative light received an assist early this month when the yield of the 2-year US Treasury note briefly rose above that of a 10-year note. So they scream recession when this happens. And what that means is the focus of the investor says, I want my return on short term better than long term, because I believe short term is more beneficial to me in times of economic change, where long term means I'm betting on the future. Well, they're not betting on the future as much as they want to bet on the short term right now. And when that happens, it usually means that they're calling for a recession to come our way. It's in the news media right now. Do I think it's exactly accurate? I don't, but I think it's worthy of just kind of understanding that the consumer mindset says, hey, I'd rather bet on short term than long term right now. And that's really what that means. Anything you'd add?
No, in reading this, it just kind of made me look at it and go, everybody's got an opinion. Everybody, you're hearing, we could go to recession. You could not go to recession. Be ready for anything. Have levers you can pull, have expenses you can pull.
Yep.
You can make your business recession proof, and DFW has fared fairly well during recessions, partly because of a lot of the corporate relocation that's happened. So don't panic, just know what you're going to do.
Absolutely. And Jim, we ran out of time, but I wanted to bring something up real quick. This article talks about real estate syndication. And there's a book I've been reading called The Hands-Off Investor. And real estate syndication investing is certainly becoming a big deal. Like, people are putting passive money into real estate syndication investing, meaning this firm is flipping Trend Tower, and everybody can put their small investments amount into the real estate syndication, and they own their fraction of it, but they get the benefit of the investment where they never would be able to play in that arena. And there's a lot of companies that are doing this at a higher level because it's easier to raise money from consumers like us that are savvy and want to invest in things than trying to go to a bank sometimes.
Yep.
And there's actually a lot of money and a lot of wealth to be made here. However, it's do your due diligence. And I just wanted to bring the topic to the table to say, hey, we may be talking more about real estate syndications in the future.
Yeah. I had somebody I was golfing with this last week that made that comment of, I'd love to invest. I just don't have a lot of money to put into it. Perfect outlet. I think you're right.
There you go. All right, guys. Happy Monday.
Hey, Brett, one last thing for everybody to pay attention to. The Fed is meeting today through Wednesday. We could see that interest rate this month come Friday. So be watching for it.
Good news there, Jim. All right, bye.
Yeah.
Bye.
Have a good one.